Hi, I'm David, Director of the Retail Leasing and Consultancy team at JLL. Today, I will be providing an overview of Singapore's retail market for the third quarter of 2023. Retail sales continued to show resilience amidst prolonged inflationary pressure and consumption tax hikes. In the first 2 months of the third quarter, the retail sales index dipped 1.7% year-on-year, compared to a 3.2% year-on-year decline in the second quarter of 2023. The decline can be partly attributed to the fall in sales at department stores and of certain discretionary goods. Between January and August, Singapore has representing about 70% of 2019's pre-pandemic figures in the corresponding period. According to Singapore Tourism Board, visitor arrivals are expected to reach 12 to 14 million, with tourism receipts anticipated to hit $18 to $21 billion. Island-wide vacancies have experienced a steady decrease over the last 3 quarters to almost 2%. Occupier demand was supported by a range of trades, primarily F&B establishments. Some factors contributing to demand include a steady growth in the tourism sector, a healthy pipeline of meetings, incentive, conferences, and exhibitions, or MICE activities, and a resilient domestic consumer market. In the prime submarket, vacancy rates also fell 3 consecutive quarters in the third quarter of 2023. While no new supply was added in the prime submarket, occupier demand for both retail and F&B spaces remained firm, echoing the uptrend in international visitor arrivals, lifting retailers' confidence. Similarly, the secondary submarket saw no new supply this quarter. Vacancy rates fell to about 4%, marking 6 straight quarters of decline. Key demand drivers within the sub-market include the ongoing recovery in MICE activities, as well as sustained foot traffic from the return to office momentum, predominantly in the office-centric locations. In the suburban sub-market, while we saw the opening of Sengkang Grand Mall in the first quarter and Woodleigh Mall in the second quarter of this year, supply was tight this quarter, with the closure of J-Cube bringing vacancies down to almost 1%, making it the 6th consecutive quarter of decline. Occupier demand remained firm despite several business consolidations, as resilient resident consumption amidst a tight labour market continued to spur expansion. Underpinned by firm occupier demand and tight supply conditions, all sub-markets enjoyed rent growth for 8 consecutive quarters. Year-on-year, rent rose 2.8% in the prime sub-market, 1.8% in the secondary sub-market, and 2% in the suburban sub-market. While rent growth is expected to extend in the medium term on the back of tightening vacancy rates, macroeconomic headwinds as well as retailers' sensitivity to rent hikes amidst more challenging and uncertain operating environment could moderate rent growth potential. Thank you for watching this quarter's Retail Real Talk. We'll see you next quarter.